Yo, bro, I did it. Let's go. Holy shit. There you go. I did it. I finally created my own strategy. I've been testing it in the markets for a while now, and honestly, I'm finally ready to share it. I call it the TRIS model. Now, don't get me wrong, you might be asking, but Tristan, why did you change your strategy if you were profitable with your previous one? Well, I get you, but you'll 100% get me why I made that decision after watching this video. So genuinely, I'm not trying to waste time here, so I'll go over exactly what you're gonna get from this video and why you should stick around. So first of all, I'll go over on why I actually changed the strategies. I mean, yes, that's pretty boring, but then after that, I'll go over the pros and cons of the strategy, then a strategy breakdown, and then I'll show you 2 live examples on the charts. Now remember, I'm still optimizing the strategy, making new rules, so don't take anything as guaranteed yet. But trust me, I couldn't resist not making this video ASAP because you lot was asking it a lot. So yeah, anyways, every single part of this video is extremely important, so make sure you listen along. Well, as the strategy didn't fit me. Now, to the fellow viewers who trade my previous supply and demand strategy, you know how you could go for a 6-loss losing streak and then take that 1 to 10 trade, and then that will cover all your losses. Well, if you were to miss that 1 to 10 trade, you will still be down -6%. And what I mean by this is that it's completely inconsistent and not for good long-term profitability. Now, the second reason it didn't fit me was because of the multiple decision making. Now, yes, personally, I have mastered it, but I don't like teaching it. I never got as why you wouldn't choose a strategy that has got strict rules. So next we got the psychology interference. You know that psychology is the most important thing in trading, right? Well, if it is, then why make it harder for yourself? Where to enter, where to put your stop loss, where to take partials, so many other things, multiple decision making. And the more decisions you allow yourself to make, the more room you let psychology to interfere. Think about it. Back to the old point I made. Just think about it. If you've got the option to make different decisions, then you give psychology more room to interfere. I'm just saying it twice because you need to get it into your minds. No one actually talks about it. They all say, stay consistent, stay disciplined, but they never talk about having strict rules, because you have something like, yeah, take partials at somewhere around there and take your take profits somewhere around there, or enter once you see this. But if you have strict rules, take profit there, break even there, stop loss there, enter here. You just don't give yourself, you have nothing to lose. You don't give yourself the ability to be emotional. And what I've optimized to is a perfect strategy for specifically psychology. It's simple, it's easy, it has strict rules, a balanced risk to reward ratio, and a balanced win rate. And that's usually where traders mess up, not because of their strategy, because they give themselves too much freedom. So next we got long-term sustainability. Yes, I know I could have just gone for a lower risk to reward and made those rules with the supply and demand strategy. I didn't have to completely change the strategy for this. But to be honest, the strategy was meant to catching high risk to reward and the bottom of trend move. Now, to be fair, I've always liked to be a creator of something as well, or invent something new. Now, I know the strategy I use isn't totally something like a new creation, but every single rule, every single backtesting data was done by me. I also had actually a friend who helped me, but all the rules was made by me, so I would call it a strategy that I invented, and it's based on everything I've learned in the past few years. And if someone trades similar to me, then I'll definitely love to know. But I know definitely that this strategy is perfect for me. I've also read a lot of trading psychology books recently, and that also helped me make this decision to move to this strategy. Anyways, let's finally go over the TRIS model strategy. You must be screaming at the screen telling me to go over this strategy. So let's get into the pros and cons. So the first pro is a fixed TP and break-even rule. Yes, you don't have to manually choose where you take your take profits or where you take your break-even. For this, psychology is just so much easier. And you must be asking then, what is my fixed TP rule and my break-even rule? So I always go for a 1 to 3 risk to reward ratio with a break-even level at a 1 to 1.5. Those are my current rules at the moment. I might make some taking partials, but like I said, I'm not guaranteeing anything at the moment. I'm just giving you introduction to it because a lot of people were asking. And also you might be asking, one of the most important question is, what is the win rate and the average RR for the strategy? Well, obviously the average RR is 1 to 3, like I said before, but what is the win rate for this strategy? But before I say it, you need to understand that these were backtesting results, not live results, and live results may differ a lot from the actual backtesting results. So yeah, the average RR is a 1 to 3, and the win rate is, drum roll, 73%. That is a lot. But please, again, understand that this was back testing. All right, don't tell me I'm a guru because I've got it. Literally, I can show you proof as well. I've got a lot of back testing results. I've done a lot, and gold was the best personally. And yeah, these were all the trades I've taken live. Was the average win rate of 73%, 73.2%, which is absolutely insane. And this is for about 500. Let me check real quick. This is for exactly 568 trades. Now I am currently still backtesting a lot. I'm at like 700 because I did this win rate thingy a back ago. But I am going to do about a few thousand trades backtesting, and I'm backtesting it a lot. So yeah, currently 73% win rate. That is insane. And also another disclaimer, for all the people I used to teach the supply and demand strategy, please do not hop into this one because the results were better. Every single strategy works. It's just about psychology. So if you feel the same way around the supply and demand strategy, you think that this is not good for you long term and it doesn't fit your lifestyle, then okay, it is okay to make this decision. But I am not telling you anything. This is completely your decision and your decision only. I made this decision because previous supply and demand strategy lifestyle just didn't fit me. But that was for me personally. Anyways, the next pro is psychology way easier. Now, I already talked a lot about psychology, so I'm not going to bore you with this. Again, I know you guys really want to know what the strategy is, but I'll go over that a bit later. First, you actually need to understand this as well because I'm going to explain it throughout. Anyways, you got one single time frame. Every single analysis is done on one time frame. Now, whilst I still use the higher time frame to maybe identify trend or see if it's between a higher time frame fair value gap, but you don't need to know those things, especially on the 50-minute time frame. But yeah, everything is executed on one single time frame as the 50 minutes. And the next pro is having one single entry model. I always use the exact entry model, and it's the best compared to the 10 I tested. Trust me, I did a lot of testing, so everything I say is completely backed with data. And I'll definitely go over the entry model later as well, so just stick around. Now, there are a lot of more pros into this, but you know, it might take me a million years telling all the pros to this strategy. But now let's go over the actual cons. There isn't much any. The only thing is having too much opportunities. Now, yes, you could just trade less pairs. I'm thinking at the moment, don't get me wrong, I'm thinking about having about 4 pairs because in futures, I mean, in Forex, I had like about 10 pairs and I don't know yet. I'm testing right now the best ones. Right now, EuroFX is completely W. I'm actually in a live trade. Actually, let me show you the live trade real quick. Okay, so here's the live trade I'm currently in now. I don't want to go over it because obviously this is not what the video is right now for. This is my actually first futures live trade. I've been demo trading. I've been on a 5 winning streak and 1 single loss, with going 1 to 3. So a quick breakdown of this. I'm not going to tell you the strategy right now, but as you can see, I entered here in the close. That's my entry model. I targeted 1 to 3, which is a bit far from here. It isn't the best in terms of structure. Like you can see, market structure is bearish at the moment, but we did swing high. This high over here, we swept liquidity right here. Unfortunately, we are reacting from this bearish fair value gap, but I am break even at the moment because it did hit my 1 to 1.5 RR, and that's it. Set and forget. Either hits my break even, I don't care. It either hits my take profit, I don't care. So yeah, anyways, back to this. Too much opportunities. But for me, I like this because then I can choose from between the best A+ setups. But for beginners, it might get a little bit too overwhelming. But once you've mastered the strategy, you can easily filter out the weak setup. But to be honest, yeah, there isn't a lot of cons into this. But now let's actually get into the strategy. Now, all I look for are fair value gaps, liquidity, and breaker structures. And I'll show you 2 live trade examples later as well. But first, you need to understand how it actually works. So the first thing is you need a strong push up creating imbalance in the market. So let's go over only the bullish fair value gap example. You can see we got a strong push up, creating multiple fair value gaps here, which means a lot of buyers stepped in and there weren't a lot of sellers in the market. And so after it leaves these imbalances, you look for the fair value gap. So I got one fair value gap right here and a second fair value gap right here. After that, I need some sort of liquidity. Yes, it is starting to look a little bit similar to my previous strategy, but I promise you there's a lot more into this. But to be honest, I'm not trying to gatekeep, I'm not that guy, but I'm not going to go everything in today's video because I'm still testing it and making some new optimizations. But if you truly want to know what's going on right now, just give me a DM or just comment. So yeah, I need some sort of liquidity above the fair value gap. As you can see right here, this is my liquidity, and now this above fair value gap is invalid because the fair value gap is not allowed to be mitigated by any single candle. So this here is invalid, but now this trade is valid. This fair value gap is valid because it now has a valid level of liquidity. Now, two things for liquidity as well, that it doesn't matter how far away it is. Now, I might make a rule on this, but at the moment with back testing, it doesn't really matter. And also one single candle. Don't need much more than that. As you can see, you made one single candle. After that, you need the liquidity to take it out its own high. No, you need the liquidity to take out its own high as a breaker structure. Then this bottom fair value gap is valid. Now, all I need price to do is return to the fair value gap and then show a reaction. Two things to hear as well. The reaction is allowed to go through the fair value gap and it's also allowed to close inside the fair value gap. But what I need to see is this. I need to see a first bullish reaction from the fair value gap. That's where I take my entry. I target a 1 to 3 with a break-even level at a 1 to 1.5. So this was like a little strategy breakdown, but now let me show you the actual 2 live trade examples so you would understand it way much better. Okay, so unfortunately, I'm a little bit smaller now, but I'll go over one bearish fair value gap and one bullish fair value gap. Right here, you can see I'm looking for shorts. Let's go to replay mode. As you can see, we had this strong push down, which created imbalance. And then we got a few fair value gaps. We got this fair value gap, and we also got this fair value gap. Now, there are a lot more things into it, like inverse fair value gaps, but like I said again, I'm not going to go into it in today's video. As you can see, we need a level of liquidity. Now we got a level of liquidity, but this is not valid unless it takes out this low right here. So for bullish fair value gaps, it needs to take out its own high, but for bearish fair value gaps, it needs to take out its own low as a liquidity breaker structure. As you can see, now we took out this low. Now we took it out with the body. All we need price to do is return to either this fair value gap or this fair value gap. So let's see what we do here. So we come up, but we completely destroyed this fair value gap and we came up to this. Now we wicked above this fair value gap, which shows rejection. You can see how strong this fair value gap is. So then I enter as soon as this bearish candle closes. So I enter on the first bearish candle to react from my bearish fair value gap. And for my stop loss, I have it slightly above the zone, slightly above the deepest wick that went inside the fair value gap or above the fair value gap, just if it wants to come back and sweep that. So then I have a risk to reward of a 1 to 3 and break even at a 1 to 1.5. So that's somewhere around over here. And I just wait until it play out. And this here played out absolutely perfectly. And that's about it. You just look at market structure. Actually, yeah, we got a few examples here as well. See, we got, I'm not going to talk about demand, I usually just supply and demand. I keep saying demand. I'm not going to look at these bullish, but as you can see right here again, this is not much as a clean setup. Also, this is allowed. This here is allowed as this is not tapped, but if it taps after that, then it's considered tapped. As you can see, we have liquidity right here. This is not our liquidity. We had a breaker structure to the downside. We entered on the close here. We tapped into the fair value gap just a little bit. Euro FX, this is the pair. Usually likes to do this a lot, that it barely taps into the fair value gap. We take the close entry just a little bit above the deepest wick, and we targeted 1 to 3 risk to reward ratio. So this here was a bearish fair value gap example. Now let me show you a bullish fair value gap example. So yeah, why not show the previous trades I've taken? So I took this trade live, I also took this trade live, and I also took this trade demo, out when I was testing the strategy. Now this kind, just want to say off the bat, this kind is not valid. You can see this liquidity needs to be unmitigated from the fair value gap. But let's go over this demand, this bullish fair value gap. You can see you would enter on the close. As soon as this bullish candle closes, stop loss just a little bit below. Now, currently, I don't have a rule on this because on futures is about ticks and there's always difference. So I'm going to have to see. Right now is visually just a little bit below. I'm definitely going to have to make a rule on this because it's not really good. Then you targeted 1 to 3. Let's see with this volume profile. Okay, I'm not going to explain this again, like I said. And we got liquidity, breaker structure. This is more of a liquidity sweep, but that is allowed as well. You can see liquidity right here, liquidity right here. This is my main liquidity, breaker structure, and also the trend is really bullish as well. And we also had this quick fair value gap right here. This bearish fair value gap, another win here, targeted 1 to 3 risk to reward ratio. And this was another one here again. Now, I promise there's a lot more into this, but this was just a little introduction to it. Remember, psychology is 80% and the strategy is like about 20%. So don't just blindly follow this. If you want to learn this, give me a DM, ask me some questions, test this yourself and see for yourself. And if you are trading my previous supply and demand strategy, do not hop into this one blindly. You need to actually see it for yourself, see if it fits your lifestyle, and then you can make that decision. But for most of you people, I do not recommend this. So peace out. Yeah, love you, bro. Love you, bro.